Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets buried in corporate filings. And today we're diving into Uniti Group, Incorporated's latest report. Get ready, because this one has some interesting financial maneuvers and a few things to keep an eye on. Before we dive in, if you love getting clear, no-nonsense insights from these documents, make sure you're subscribed and join our growing Discord community, linked in the description below. Uniti Group Incorporated is reporting on a significant financial event. They've announced the pricing of a pretty substantial offering of new debt, specifically secured fiber network revenue term notes. Think of it as the company borrowing a lot of money, but with specific assets backing that loan. It is a common way for companies, especially in infrastructure, to fund growth or operations. This particular deal involves subsidiaries of Uniti Group, called the ABS issuers, and they're set to issue $250 million in these notes. It is broken down into different classes like Class -2, Class B, and Class C notes, each with varying interest rates. The weighted average interest rate, or coupon rate as they call it, across all these notes is about 5.671%. That is a pretty specific number, and it tells us the overall cost of this debt for the company. They're aiming to use the money for general corporate purposes. This could mean a few things. It might go towards paying for expansion, which is crucial for a company like Uniti that invests heavily in its network. Or they might use it to pay down existing debt, which can be a smart move to lower their overall interest payments. The deal is expected to wrap up by the end of October 2025. On top of the main debt offering, Uniti is also lining up a commitment for a $75 million variable funding note facility. This is like a revolving line of credit, but it is tied to the same loan agreement as the main notes. It sounds like they don't plan to actually use this credit line right away, but it is there if they need it, subject to certain conditions. It is important to note that these new notes are not being registered with the US Securities and Exchange Commission, or the SEC. This means they're being offered to specific types of investors, like big institutional buyers under certain exemptions. It is a common practice for large debt issuances and generally indicates that the notes are being sold to sophisticated investors who understand the associated risks. The report also includes a standard section on forward-looking statements, which is basically a disclaimer warning that future predictions might not turn out exactly as planned. They list a bunch of potential risks like competition, debt levels, rapid technological changes, and regulatory hurdles. This is all pretty standard for these kinds of reports, but it is good to be aware of the landscape the company operates in. Finally, the report lists exhibits, and the most important one here is Exhibit 99.1, which is the press release detailing this debt offering. Now, let us shift gears and get to the heart of what this filing, and indeed any corporate filing, really tells us. This report is primarily about a debt issuance, a significant one at $250 million. For Uniti Group, a company that thrives on infrastructure and network investment, raising capital through debt is a core part of their strategy. The key question for investors is always about the cost of that capital and what it will be used for. The weighted average coupon rate of 5.671% gives us a clear picture of the interest burden this new debt adds. While this is exceptionally high in the current economic climate, it is still a non-trivial amount that will impact their bottom line. The use of proceeds for general corporate purposes is a bit of a catch, all phrase. It could be for growth initiatives like expanding their fiber network, which is vital for their long-term competitive position, or it could be to refinance older, more expensive debt. The latter would be a positive sign indicating they're optimizing their cost of capital. Without more detail in this specific filing, it is hard to definitively say, but we should watch how this capital is deployed in future reports. Looking deeper into the implications, this debt issuance signals Uniti's continued reliance on borrowing to fund its business. This isn't inherently bad for an infrastructure company, but it does mean that managing their debt levels and interest payments is a critical aspect of their financial health. We need to keep an eye on their leverage ratios, essentially, how much debt they have compared to their assets or earnings. If these ratios climb too high, it could limit their financial flexibility and make it harder to raise more capital in the future, or even lead to increased scrutiny from credit rating agencies. The company also mentions a variable funding note facility. While they don't plan to draw on it immediately, it exists as a potential source of liquidity. This suggests they want to maintain flexibility and have access to funds if unforeseen opportunities or challenges arise. It's a good sign of proactive financial planning. So, what is our take on this filing? Uniti Group is actively managing its capital structure to support its operations and likely growth plans. The debt issuance itself is a strategic move, but the devil is in the details of how the funds are used and how it affects their overall debt load. The risks mentioned in the forward. Looking statements are a reminder that the telecommunications and infrastructure sectors are dynamic and competitive. The company's success will depend on its ability to navigate these risks, innovate, and execute on its strategy, all while managing its debt obligations prudently. Alright, that is our breakdown of Uniti Group Incorporated S latest filing. What's your take on this debt issuance and what it means for the company S future? Drop your thoughts in the comments below. If you found this analysis helpful, please hit that like button. It really does help us out, and subscribe for more deep dives into corporate documents. And don't forget to join the conversation on our Discord. The link is in the description. Thanks for watching, and see you in the next one.